Call 12th of November 2025. I'm Mark Gardner. So investors switched out of tech. There's a number of different reasons, but record valuations. Michael Burry has run his eyes over the books and gone into a fair bit of detail and given some depreciation red flags for the the amount of capex and chip spending. So which as you can see, the Dow was up 1.18 overnight. The S&P only up 0.2, but the Nasdaq was down 0.31, and that was really on the back of Nvidia. So we had one of the significant shareholders, SoftBank, which is one of the bigger one of the bigger Japanese banks that invests heavily in AI, which took a big hit a few weeks ago, about 20-25%, and which is a bit of a bit of a red flag for the AI thematic as well. But they sold their entire $5.83 billion stake, and they pivoted their investments towards OpenAI AI and CoreWeave. They certainly got some value overnight because CoreWeave got belted about 16%. There's a bunch of concerns there. Look, I've done CoreWeave on the call before. It was only on Ausbiz. It was only a few months old or just IPOing. From a balance sheet and financial perspective, it had more holes than Swiss cheese. But at this point in time, they seem to be bringing in the revenue that was promised. So it may well survive, but they're certainly walking a tightrope. And it'd be interesting to see whether this depreciation argument actually applies to CoreWeave as well, or whether they're just renting, which I'll do a little bit more of a deep dive into maybe later in the week. It is Veterans Day in the US. It was also obviously Remembrance Day yesterday in Australia. Not a public holiday, but it will be Veterans Day today. Veterans Day just been, which is a quasi public holiday in the States. But as you can see overall, not a huge amount of movement. The Euro stocks was up early, and then in the European session, which is sort of just crosses over with the US session, was up 1.14. We were down a fair bit more mid-session in the US, but as we've sort of seen, or as I've said on the previous morning's pods, basically we're keeping a really close eye on this momentum, because the list of fundamental reasons as to why we should be lower, it isn't seeming to have much of an effect on what the market's actually doing here at the moment. But look, very concerning. Nvidia down 3% overnight. One of the sillier things I've seen is that they actually bought Apple instead because they haven't invested in AI, which just goes to prove that the momentum's still to the upside, because that is the silliest excuse I've ever seen to buy a stock. It's like, we're going to reward you for being left behind and not innovating at all and not spending. So I find that very difficult logic, or whether that's it was just a weird reason. Apple is sitting on a mountain of cash and has a very stable revenue line at this point with iPhone and their ecosystem, etc. So I think it's more to do with the fact that, as you can see, defensive sectors like healthcare technology, consumer non-durables, and these consumer services in the defensive area and the likes of Walmarts and things like that, those defensive sectors were very well supported last night. The Dow being up and the Nasdaq being down also signals a switch to defensive. To be honest, I think that the newswires have basically just realistically got that wrong. I mean, I don't think anyone's going, "Yay, Apple didn't invest in AI." I think that's just more so the defensive nature of that business at the moment means that it's still adjacent to AI and the tech, but it is not fully leveraged to it like the likes of the Broadcoms, the AMDs, the Nvidias, the Oracles, etc. So one major concern around this depreciation number is And one thing you'll have to watch out for is Oracle, which has the highest debt to equity ratio by a significant margin than the rest of the AI companies. And if this, if Mr. Burry's, big I mean, he said a lot of things since, he was famous from The Big Short. He said a lot of things since since he got that mortgage-backed securities thing right in the GFC, and he's not been right on many of them necessarily, or certainly these big calls. And look, media tends to focus on those big calls. So he, picking black swans is the quickest, probably, well, not the quickest way to go broke, but it's definitely a good way to burn, bleed chips, to give a poker analogy, and go broke, because that's the whole point of black swans. You're not supposed to be able to pick that they're coming. But I would say, the SoftBank selling and diversification, it may have been the straw that broke the camel's back for SoftBank. Because having a look into it, it's, what he's saying is fairly legitimate. They're stretching the lifespan, which of the chips, which are realistically only 2 to 3 years use, but they're stretching the depreciation over multiple years, or the most they can possibly do. So the reality is that the life cycle, that means that they'll have to be replaced a lot faster than what they're depreciating them at, and that could come home to roost, on a valuation perspective at some stage in the future. So yeah, look, look, this would be one of the very few occasions where you would actually probably listen to him, because he's, he was the guy that looked into the detail when no one else looked in the past. So, and this is similar-ish, but, I mean, there's been a bunch of other things he said in the last 12 to 24 months that people have claimed that are, you'd probably take with a very big grain of salt. So, so we'll have Cisco after the market tonight. Tencent Music as well, and Circle may be interesting. We've still got to get the government shutdown through the House of. Get it through the House and then be approved by Donald Trump. There wasn't, Veterans Day is on as well. So, this may not happen till the end of the week. They were talking about a 24-hour turnaround. So realistically, it may be a Monday start next week. We haven't heard peep out of, everyone's just assuming it's going to get through the House. Everyone's assuming that Donald Trump's going to have no problems with it. But yeah, we will see, I guess, over the coming days. We've got employment tomorrow, but look, earnings, everyone's really, really focused on these these valuations at the moment. And they're, I think we've got the foremost used, valuation metrics in the, for stock markets, basically. They all ticked over. So we've got price to earnings ratio, price to sales, price to book, and the Buffett indicator, which is the market capitalization of GDP. The average of those four hit 178% last night, making this officially, and I don't know whether we get a medal or something, but officially the most expensive market in history. So we will, that means there's very little room for error. I think personally that, I think the AI is a genuine long-term thematic that probably deserves to hold that record. I think it's probably one of the most significant technology jumps, since the motor vehicle or rolling out electricity. So I'd be probably unimpressed if it hasn't reached that record valuation, because I think it probably deserves it. However, it is a red flag, and we're competing against the dot-com boom where there was really no revenue, and there was no profits. So, I wouldn't be surprised to see that go a little bit further at some stage. But but you will see a lot of social media and tweets and etc. out there. But these metrics have been overvalued for months and months. So, as I say, I think the passive flow and the technical momentum at this point, given the the cons side of the ledger for the fundamentals is pretty much full, and will be the deciding factor overall, unless we get some form of geopolitical issue. But that seems to have calmed down. There's less daily press conferences from President Trump, so fingers crossed we get a little bit of peace and quiet over the coming months from Trump. Gold, silver continue to rally. There's a bit of a bounce back. Copper was off about 0.8%. No real news across the board here. Bitcoin go back a little bit yesterday. Uranium go back a little bit yesterday. Lithium still maintained, but up. The lithium ETF up 1.8. Uranium go back 3. Bitcoin go back 3. Gold's up 0.36. Silver's up 1%. So I think I probably should have been a little bit more aggressive. I think that was a really good buying opportunity in gold and silver and platinum in recent times. While everyone's rejoicing the pullback, it still went about 10% further than anyone ever thought. And people were getting laughed at for saying 4,000, 3 months ago, and we went to 4,400, and we're still at 4,000. So I don't think that you can mark that as a loss for the gold thematic. The US government debt is still just ridiculously spiraling out of control. The dysfunction in the US government, with the prime example being the longest government shutdown they've ever had, and the fact that tariffs could potentially not be legal because they've been decided, etc., means that US dollar is under great pressure essentially, and statements like Trump talking about injecting 20 trillion into the US economy. He wasn't very specific on those comments, but yeah, I think around these levels, gold, silver, platinum, and those precious metals, and potentially those real assets, possibly Bitcoin as well, are probably a very good buying opportunity. So obviously this is general advice only. Consult your advisor, etc. But yeah. In terms of the Australian market today, the SPI was up. SPI was up, I think, about 0.2, 0.3%. We don't expect a mountain of action today, but it should be probably fairly good for our market. Whenever the Dow does well and the Nasdaq doesn't do well, our index tends to outperform a little bit, which does make a lot of sense because we don't have that massive tech sector. Which quite the opposite to the US. So yeah, I would be thinking up 0.24. I think we could probably grind out up 0.5%, up or up 0.75% over the course of the day, given how much we've been beaten down, and a jump in these commodities and oil, etc. as well. So everyone have a great day, and